Hello and welcome. The way you file your tax return is about to change in a really big way. HMRC is gathering more of your data than ever before, and honestly, it could put you at risk of an incorrect tax bill. So, in this session, which we've put together with the experts at My Tax Accountant, we're going to show you exactly what's happening and, more importantly, how you can protect yourself.
Okay, let's just jump right in with a number that should really grab your attention. Did you know that right now, as we speak, HMRC's supercomputer, it's called Connect, is holding 55 billion separate pieces of data on UK taxpayers? No, that is not a typo. 55 billion.
And this isn't some science fiction movie. This is the reality of UK tax here in 2025. This absolutely huge data network is being used to build a detailed financial profile of you. And believe me, it's getting more powerful every single day. So let's break down what this Connect system really is and what it already knows about you.
What's just incredible here is the sheer scope of the data collection. We're not just talking about your salary from your boss. Connect scrapes data from a massive range of sources. It sees your bank accounts, your savings, the properties you own. It's monitoring your activity on platforms like eBay and Airbnb to see if you're making a bit of cash on the side. It can even scrape your public social media profiles to see if your lifestyle, if it matches up with your declared income. The goal is simple: create a complete digital picture of your finances, making undeclared income harder to hide than it's ever been before.
But that's not all. Not by a long shot. Following the recent 2025 budget, starting from April 2025, HMRC is making it mandatory to provide new, really specific information on your tax returns. Now, these aren't suggestions, they are requirements, and they're backed by penalties. Let's see how these new rules build on the data they already have.
First up, for employers, you will now be required to report detailed information on the hours your employees are actually paid for, and you'll do this through your regular PAYE submissions. This isn't just about salary anymore, it's about tying every pound of pay to specific hours worked. The administrative burden this is going to place on businesses, especially if you have complex shift patterns, has been flagged as a serious concern, but the rule is coming in regardless.
Next, if you're a director who owns and manages their own company, you can no longer just lump all your dividend income together in one box. From now on, you'll have to report dividends from your own company separately. And this just shows the level of detail they want. You have to include the company's name, its registered number, and the percentage of shares you hold. It's a pretty significant extra layer of reporting.
And finally, for all the self-employed people out there, you know those questions on the tax return about your business start and end dates? The ones that used to be optional? Well, not anymore. From the 2025-26 tax year, providing these dates is mandatory. This might seem simple, but as any tax expert will tell you, figuring out the precise start date of a trade isn't always straightforward, especially if it just started out as a hobby. Now, it's a compulsory declaration.
So why is HMRC demanding all this extra information? Well, this leads us to their official vision. Let's take a look at their side of the story for a second. They're promising a future where your tax return is simpler, more digital, and almost entirely automatic.
This quote is directly from HMRC's own transformation roadmap, which was published in 2025. Their goal is to use all of this data to pre-populate or pre-fill your tax return for you. The promise is that by 2030, most of us will just need to log in, check the figures that HMRC has already entered, and click Submit. It's a vision of a frictionless tax system. On the surface, it sounds fantastic, right?
But, and it's a very big but, here's where most people go wrong. They believe the promise without really understanding the risks. So we need to pivot from HMRC's idealized future to the real-world problems that taxpayers are already facing with this pre-filled data. It's time for a reality check.
Look, this isn't a hypothetical problem. This is a direct quote from a real taxpayer posted on the professional forum Accounting Web. They logged in to find HMRC had automatically added income from a job they'd left over 2 years ago. Even more alarmingly, the system had created a phantom self-employment income source based on their membership of a local club from which they had never earned a single penny. That's a pretty stark contrast to the promise of getting it right first time.
Let's make this more concrete with an example. So, meet Chloe. She's a freelance web developer living in London. She runs her own limited company, and a few years ago, she occasionally rented out her spare room on Airbnb. Under this new system, HMRC's pre-filled return could easily be filled with errors for her. It might pull in the wrong dividend figures, or worse, resurrect that old Airbnb listing as a current phantom side hustle, creating a tax liability literally out of thin air. For Chloe, this isn't a simplification. It's a stressful and confusing nightmare. And this isn't just an anecdotal issue. Expert bodies are sounding the alarm. The Low Incomes Tax Reform Group, a very highly respected organization, has pointed out a critical flaw in this new system. They warn that the legal and the practical burden to find, challenge, and correct these data errors falls 100% on you, the taxpayer. HMRC may provide the data, but they take zero responsibility for its accuracy.
So, here's a pro tip that explains one of the main reasons these errors happen. The data that HMRC gets from digital platforms like Amazon or eBay or Airbnb is reported based on the calendar year, so January 1st to December 31st. But your UK self-assessment tax return runs on the tax year, that's April 6th to April 5th. This creates an automatic and a fundamental mismatch. The income figures HMRC pre-fills from these platforms will almost always be incorrect for your tax return, yet they will appear on your form as if they are fact.
Which brings us to the most crucial point of this entire discussion. So stay with me. This next point might actually surprise you. It's all about who is ultimately on the hook when things go wrong. It's a natural assumption to make, isn't it? If the official tax authority puts a number on your official tax form, surely they're responsible for it. If it's wrong, it must be their problem to sort out, right?
Wrong. This is the hidden trap. The law is absolutely crystal clear. The moment you click Submit on that return, you are making a legal declaration that every single figure is true and correct, and that's regardless of who put it there in the first place. The responsibility remains entirely, 100% with you. Accepting incorrect pre-fill data is exactly the same as entering it yourself.
And here's the real kicker. This is an actual question taken directly from HMRC's internal compliance manual. That's the rulebook their investigators use when they're looking into a taxpayer's affairs. Just think about what this question implies. When you correct an incorrect number that they provided, their system can flag it. Their first question isn't, did we make a mistake? It's, why did you change the number we gave you? Correcting their error could actually be the very thing that triggers a tax investigation. You're basically in a position where you're penalized for accepting their wrong data and potentially investigated for correcting it.
Okay, so the crucial point is not to panic, but to be prepared. This new reality demands a new approach. You simply can't just trust the system anymore. You need a pre-flight checklist to protect yourself before you even think about filing.
Here is your 4-step action plan. Number 1, trust nothing. Approach any pre-filled data with a healthy dose of skepticism. Assume it could be wrong until you've proven it right. 2, gather your own records. Before you even log in, have your own bank statements, invoices, P60s, and dividend vouchers ready to go. This is your source of truth. 3, check every single line. Meticulously compare every figure HMRC has provided against your own records. Don't gloss over anything. And 4, correct and document. Change any figures that are wrong. But crucially, keep a detailed record of every single change you make and why you made it, along with the evidence to back it up. That way, if they ask, why did you change this field, you'll have the answer ready.
Now, following that checklist is absolutely essential, but navigating this complex new landscape alone can still be a huge challenge. For absolute peace of mind and expert guidance to make sure your return is 100% accurate, we highly recommend contacting the team at My Tax Accountant. You can reach them on 0208-570-8531, or you can email them at info@mytaxaccountant.co.uk.
And of course, we have to include this important disclaimer. The information in this presentation has been provided for general guidance only. It is not a substitute for professional advice, and you really shouldn't rely on it exclusively to make financial decisions. Before taking any action, you must consult with a professional tax expert like the team at My Tax Accountant.
We'll leave you with this final thought to consider. In a world where the tax authority knows more about you than ever before, but where all the responsibility for their mistakes falls directly on your shoulders, is getting professional tax advice no longer just a sensible choice, but an absolute necessity?